Good afternoon, everyone, and welcome to our special STACS Showcase that we are hosting live during the Singapore FinTech Festival event. Across this week, you've been watching a very interesting panels discussion and hot topics in the financial industry. And today we are hosting a special fireside chat with our guest. He's a banker who turned a startup to a unicorn, and we will discuss with him on how did he reach his goal. And together we will also highlight the technology and its transformative impact. I'm pleased to welcome Mr. Ray Ferguson. To give you like a quick introduction, Ray Ferguson is a renowned international banker, business leader, and advisor. He's the present chairman of the board of Singlife, a life insurance company licensed in Singapore and Philippines, which recently acquired Aviva Singapore to create Aviva Singlife Holdings in a $3.2 billion deal. He also recently joined us as a board chairman of STACS, and Ray has an extensive executive career in a banking across 5 continents in multiple chief executive roles with a Standard Chartered and Bank ABC. He also been named as distinguished fellow for corporate banking by the Institute for Banking and Finance, IDF. Good afternoon, Ray. Thank you again for joining us. Thank you so much for joining our live streaming session. How are you today?
Look, I'm great. I think it's a fantastic week. We got not just you've got the STACS Showcase going on. There's the other SFF events, some of which I've been attending last night and again tonight, and some smaller dinners associated with that. Yes, it's a great week and a fantastic week for Singapore on the world stage.
Yeah, and it's not finished yet. We are only Wednesday. So first of all, congratulations for this great news. And can you share more about your recent achievement of leading Singlife on a successful 6-time on oversubscribed fundraise, as well as incurring Aviva Singapore?
Yeah, look, I just maybe just step back and tell you a little bit about. I built my career in the general management side of banking. I ran large parts of Standard Chartered in Asia, in the Middle East, and the Americas, including being chief executive in Singapore and Southeast Asia for many years. And then about 3.5 years, 4 years ago, I decided that I had enough of being a banker and being in an executive role, and I looked to do some different other things. And I was introduced to the founder who had the idea of doing something very different in the life insurance space with technology. I was introduced to him just through a friend, and we got together, and one thing led to another, and we joined forces to go out and raise the initial $50 million we needed to put Singlife together. And through a combination of both our networks, we were able to achieve that in 2017. And when we were able to, we both he came from HSBC Insurance, and I come from running big financial institutions at scale. And we, although we started with a startup and we only had 4 people in the office and we had a PowerPoint, really was all the business plan, we were able to convince the Monetary Authority of Singapore to give us a license. First one in about 40 years that had been given. And we convinced 2 great investors to support us. And we took it forward from there. We built with a few real principles in mind. We built from a cloud-only basis. We built paperless. And paperless back in 2017 was painful because the regulator hadn't quite got her head around completely digital signing and completely paperless record keeping. But we worked with that, and we were able to overcome those barriers that are now fairly commonplace. And we set up Singlife with a view to just making life assurance a lot more cool, a lot easier to transact, something that was a much more engaging than it currently was being offered. And our journey took us through an acquisition of Zurich Life in Singapore in 2018. In late 2018, we also acquired a company that had a capability in issuing a Visa card. Now, what has an insurance company got to do with Visa card? Well, we figured that cards and day-to-day money management are as important to people as also linking their protection or the life insurance or the savings needs. So we set about building something called the Singlife account, which is we were one of the first ever Visa issuers, or we are the first ever insurance company that issued a Visa card. And we, through that platform, certainly over the last 6 or 7 months, we've put tens of thousands of new clients on board into our ecosystem. Just to then move it a little bit further forward, but we raised money from a number of, initially from 2 family offices, but quite quickly I realized that to get credibility, you needed to raise money from very credible institutions that added not just money to develop and build our tech infrastructure and hire great people, but they gave you credibility. And we were able to go and raise money from people like Aberdeen Standard, the investment manager, Aflac, which is a large US insurance company, and began to fill out the shareholder base with institutional capital. Sumitomo Life from Japan also came in very strongly. And by the end of about a year ago, we felt that the next big step up here, having built the infrastructure, is we need more customers to spread this over. We heard that Aviva maybe wanting to sell the Singapore business, and the Singapore business had 1.5 million customers, had a lot of product, had some reasonable tech, but it was certainly not the cloud, intuitive, app-based, mobile-first infrastructure we built ourselves. And we just had this vision: if we could take that mobile-first and mobile and cloud capability and take that with the product set that they had alongside the 1.5 million customers, we could really roll out big in Singapore and then take regionally. And that's what we set about doing. Those have been a long task. It's not easy to put these sort of things together, and COVID got in the way. We got started, we got moving forward on it in February, early March. Mid-March came and things got really tough, and we backed off, only to restart again in July, and we completed the deal finally just 10 days ago. So I'm going to chair the enlarged group. It is a $3.2 billion transaction, and yeah, we raised some money in the bond market. It was 6.5 times oversubscribed, as you said. We also raised some significant equity from one of the world's largest private equity players, and the good news is that Aviva also had so much faith in us, they've kept a 25% stake for themselves as we move forward. But that's the potty history. But what does it take to do that? It takes a lot of tenacity, a lot of vision, a lot of effort. But I say to all aspiring businesses out there at lower down in the cap table than we are now at the scale we're at, don't be short on where you want to take it, yeah, and don't underestimate the importance of getting institutional shareholders on board, although it's very difficult and it takes so much more effort than potentially venture or family office money.
Yeah, and just to jump on that, what you was explaining about the inspiration and the business leader, I'm just really curious to know, like, what's the reason, or do you have any reason or background or something in mind by get started with the insure-tech startup Singlife in 2017, as you was having already a really successful career as the ex-CEO of Standard Chartered Bank?
The truth of the matter is that I was in an executive job. Managing a day-to-day business is actually very hard to change. Very hard to change. I actually at that time was working for Bank ABC in the Middle East, and they're a great organization. I was the boss leading that whole business, but it's still very hard to change what is a kind of old bank, yeah. And then FinTech was quite new end of 2016, it was there. People talked about it a bit, and I took myself off and did a virtual, but I did a virtual MIT 6-8 week program in fintech to see what was going on. I got inspired by some of the people I had to work with. They were not like me. They were a very different audience. Got to work with in that program in my cohort, and both globally and the faculty and also and some of the people that we got physically together with here in Singapore. So I took a kind of interest in it. And then when I met up with Walter, who's the founder of Singlife, he had been trying to raise money for quite a long time at that point. He had a very clear vision. He had a very nice PowerPoint. He had a lovely name, Singapore Life, awesome logo, but it's hard, yeah. And I think, I just felt for me it was going to be different to be a chairman investor type role than be a CEO. I also felt that we could take the best of what was available in the world in terms of tools to build with, and that's what we did. I think now we have got a very interesting opportunity to take a traditional business with traditional distribution, traditional products, a lot of traditional technology, and gradually infuse what we've built here in the last 3.5 years, which is really super cool.
Yeah, so you take the opportunity. This is really great. And can you explain like how technology has helped in supporting Singlife to grow so fast in this past 4 years?
Yeah, I think I'll answer that having been in big financial institutions, and then contrast it, because big financial institutions have grown up, and the reason that places like DBS or Stanchart or Credit Suisse are fantastically trusted organizations is that they've been around a long time, and they've built their record of serving customers, of being efficient with payments or whatever they do, they've done over a long time. The issue with that is that technology has generally been layered in a very legacy way, one layer on top of another division, another business was bought, a bit's plugged in a very, in a way that involves some pretty tight programming between different systems, with regulators looking at them and auditors and business continuity reasons. And what ends up happening in the traditional business is what I call the whole spaghetti layer. All the systems are wired up like spaghetti. If you will, it's not, and it's not easy to sort of innovate with that sort of environment of a mixture of mainframe, old AS400 type things, different standards of programming and documentation, different skills available in the market to enhance your systems, etc. These are all the problems you face in the traditional businesses. What we did at Singlife is as we said at the beginning, we only built using a very modern architecture, but we built with a concept of having an integration layer where we would have a single view of customer, we would have a single sort of layer in the middle where everything that we did in terms of all of our back end for serving different products or different businesses that we bought would kind of come in here, and all the customer stuff would come out the other end in an API friendly integration layer in the middle. And I think the API piece is what makes it just so easy to scale and scale quickly if you build that properly. If you build now, and you can literally find ways of switching new capabilities on in days, rather than what traditional financial institutions would take months, if not years, apart from the culture of them deciding what to do, but the actual go to do it. And then there's a big cost advantage. So we recognize we didn't know everything. We certainly didn't know anything about payments when we started, but we figured that just understanding payments would help us. And as well as buying the little company that had the debit card capability and the engineers that came with that, we also took an investment in a business called Rails Bank. And Rails Bank has been a fantastic the successful, almost sort of bank in the box type organization built with a very easy to integrate APIs. We took a stake in them early on. One, because we thought it was a good investment, but really because we wanted to get to know these guys and get to know what they did and how they did it. And I think that reinforced our whole sort of API-centric integration layer approach. And Railsbank has gone on to raise further funds and has got many customers across the world now. But I think as I look back, traditional businesses wouldn't necessarily do that in the way that we sort of went and bought some capability and then knitted it together. But the key is you couldn't have done this to the same degree 10 years ago. It just didn't. You had to work with the bigger boxes. And but what we have is as safe, as secure, a fraction of the cost. And that's what allows us to innovate and move fast.
Yeah. And you see, like earlier you was explaining, you see, like back in the day, like 2017, that the fintech was not really popular and famous as in our day, and the way how you started the business. But I just wanted to know, like, as you were having like a banking background, why did you choose fintech industry or not another type of industry to be like a startup?
Yeah, look, I think banking. When I first became a banker, maybe 30 odd years ago, we didn't really think about technology as you didn't think about fin and tech in the same way as we do today. Although if you step back from it, there's nothing can be done at scale without technology. Back 30 years ago, there was still computers in the background. There was a lot of manual paperwork. A lot of records were kept. People wrote checks, and they would go to banks and fill in slips to put money in, and payments took days between. All of that was there, but there was still a big technology backbone in there. And I think that what's happened is that the growth of big tech, the growth of Amazon, Google, Apple, what happened in China with the way that the WeChat linked sort of financial app and Ali and all that they did, I think that's all been building over the last 10 years. And I think had it not been for if the big financial institutions didn't have all that legacy that we talked about, they would own this space. But unfortunately, they don't. They have all that legacy, and that legacy is both, as I said, in terms of actual systems that are running production stuff, and that's also a cultural thing. I think in China, fintech moved much faster. Some of it with some errors and some mistakes, because a lot of it was new. You were creating into new demand. A lot of what people are solving for today in fintech has been solving for doing old things a bit more efficiently. But I think as it starts to mature, it's about doing things in a very, very different way. So in the life insurance space, for example, by having a lot of data about your life, about your health, about how and when you spend your time and what you do with yourself, all the data-driven way, we can quite quickly calculate a premium to insure your life, very different from the way it would have been done before, which is to look up some old table and figure out with some actuaries. We're actually able to use real individualized data to provide a product that is personalized, both in terms of what it offers, but also the pricing of it to these individuals. And I think that's what's super exciting going forward, because I kind of talked in the other part of this about thinking about it as the systems of record, if you like, that build the back end and make sure everybody's money is safe, and how customers interface through apps. But there's a big piece in the way that data can be used, not to just sell you something, but to make life easier, to make life better, to make life more efficient, and so on. So I think that is the piece that's coming even more so. So, like, as I step back, and I don't necessarily would describe myself as being in fin or being in tech. in the business of disrupting, just as we are at STACS now, and starting to work with some of the most biggest, most conservative, most highly rated and important institutions in the world in doing things very differently, with some actual basic stuff they've been doing in the same way for many, many years. We're able to come now and help them think about things in a different way, in a distributed ledger way, which just eliminates a massive cost, saves a ton of capital, expensive capital, and allows almost instantaneous improvement in customer service at the sharp end. Yeah, and that's just the coming together of both of technologies, but also of the acceptance of those technologies and the trust in them, which we probably wouldn't have had 10 years ago.
Yeah, that's true. And to link this, it's another great news for us. As you just joined, STACS has a new chairman. I would like to know if there is any similarity on this decision, as if we need to compare with 4 years ago with Singlife.
Oh yeah, there's a couple of great things. The good news is that I didn't really know what you're going to ask me in advance, so I'm thinking, I'm talking out loud here, but a couple of things really strike me about, if I contrast these two things. The first thing is that if you're going to be a chairman, you've got to work with a great chief executive, yeah? And it's, as Aviva Singlife or Singlife was built, fantastically working with Walter Rody there. And I've known your CEO, Ben, for at least 4 or 5 years. He's a very close friend, and I got to know him in his early days of pioneering in this space. And I think he's a wonderful guy to work with. I think that's the first and the key thing, is about that kind of rapport and camaraderie and shared vision. The second point is that, I think the market opportunity for STACS is colossal. It is global. It is with big institutions. It's with some of the most sophisticated institutions in the world. It is not rocket science. I have to, putting distributed ledger infrastructure in place isn't rocket science. So the technology that we have is very well proven. It does not need to be massively developed. It's not some experimental thing. And I think we're at the point where I can help Ben and the team with using both my understanding of how big custodial organizations work, how the bond issuance market works in various emerging markets, etc., how big institutions think and change and buy and alter, and how their governance and their boards think about doing new things. But bringing all that together can really help the team get some really great wins on the board and scale this company, both from a customer side, but also from an investor appetite, and make the company very attractive, as leveraging its base in Singapore as a homegrown player, leveraging the trust that entails, because that's the way things work here, and really build this into something really special. But at the end of the day, it's got to do something that on the tin means something, and that means that it saves institutions a lot of money. It saves institutions capital. It retains customers. That makes more customers more efficient, etc. So yeah, look, I think these are the similarities of sort of bringing institutional to a smaller entity. And I think last night I was at a dinner, and they asked me to say a few words, and we were talking about mentoring and sort of paying it forward. And it was in the context of the community at large. It wasn't really in the context of FinTech. But I was making the point that if you're in a big business and you've grown your startup into $100 and $200 million company, please take some time out to help the guys that are at the stages before you. If you can't afford to invest, that's fine, but give some time, give some mentoring, give some bouncing off, yeah, and that's the way the whole ecosystem goes up. So again, for me, I'm not in the. I'm working with a couple of other startups that are even earlier stage than STACS, but it's all a journey, and we want to make it as conveyor belt like on the way up as it can be. It's not never quite like that, but that's why I agreed with Ben and the rest of his investors on board to come in and give a hand and just help you guys.
Yeah, thank you so much. That's really great state mind, because sometimes in the business industry, like in general, we just forget to help each other or to give, because we just forget that we are kind of inspiration for the other people. And we might.
But everybody can do that. You don't have to have done a unicorn to do that. Yeah, that's my point.
Exactly.
Yeah.
And also to guide them and to give some guidance. And this is really important. Yeah.
Yeah.
And now, as you said, what's your ambition in terms of goal with to achieve with STACS?
Yeah, I think I probably answered your question in the way that we, but I think that STACS could be can become a globally renowned infrastructural player for the financial services sector, built on its core DLT backbone that's built and works and proven the strength of the governance and the infrastructure that we build around that, both in Singapore and beyond. I think that the type of customers we need to have are going to be global. I think STACS will become a global organization. That means different things to different people. Global means two guys in New York and a guy in London. It's still global. And these are the directions that, we really want to take forward. And we want to find propositions that, we can work not just with the big banks, the big exchanges, but also work with the Accentures and the PwCs and the integrators that are also helping these institutions move into their very modern distributed cloud and get away from the legacy spaghetti, if you like, environment that a lot of them are in. And I think just a lot of fun to be involved in that, because at the end of the day, it's going to make instant fulfillment of automatically reconciling trades, which creates all sorts of product opportunity, takes a lot of risk and cost out, that I think these institutions are going to love us for. And that's, I spent several hours with the whole top team at STACS, and probably in the same room where you are there, at the board there, we put a lot of this up there. You just need to step back and think about what this can be, and then let's get out and have the conversations. And with a bit of luck, we will be able to start traveling properly in the coming few months. I think that Ben and I already were talking about a trip we need to make to Hong Kong. We're going to do that in February. We've got to plan around this stuff, and you've got to be much more disciplined about taking trips because of the risks and all the hassle. But I think the good news is that we will, as a team, also get out into the major parts of the financial world over the course of the next few months and explain more what we're all trying to do.
All right. Thank you so much for sharing all this experience, your vision with us. And I'm just going to check some quick question that we just received. The first one is, if there is one thing and only one thing for baby startup to take away from today's sessions, would it be? What you would be? What would it be?
What would it be? What one thing if you're a baby? Did you say a baby startup? A small? Was that what it said? Yeah, baby.
Yes. Yeah.
I think it's just don't hold back on the vision, and remember that if you don't ask, you won't get. Yeah, and I mean that it's quite a broad statement, but there are moments that, as we built Singlife, we thought there's no way we can, on our fourth week we're in business, do an acquisition of Zurich Life. The regulators will never allow it. But what did we do? We went and asked. And they said, well, maybe if you do this, this, and this, it could be done. And this is just a small example, but it's something I learned from working with Walter over these years, and we've kind of perfected it. Yeah, just think of a beyond, and don't be afraid to ask. And that can mean, if the person asked the question just wanted one thing, so I should shut up, or I give more advice.
Thank you, Ray, for the answer. And the last question is, if you are able to turn back the clock, will you do something different?
I don't think I would have done, I certainly wouldn't have done anything different in terms of deciding to leave a full-time executive banking job when I did. I think not everybody follows their own path. It takes a bit of conviction to step out of the comfort zone. So I have no regrets about that. Certainly got no regrets about what we've managed to do with Singlife and about the portfolio of businesses that I'm working with today, working with great CEOs. No, I'm kind of cool with where I'm at, and very fortunate to have not wasted COVID, if you like, this year, and to have built a new business, done a big acquisition, and I'm being blessed to be in the relative safety of being in Singapore and the freedom that's afforded us. So I'm very grateful to having that as well. But I am impatient to get out around the world now and start spreading the message as we go forward.
Yeah. And you are having experience in the 5 different continents.
Yeah, I know a lot of friends to catch up with that work in big institutions around here.
And I just received another question now. How do you envision the financial industry in 10 years' time?
I still think you'll have I'm not saying this to my friends at DBS for any particular way, but you'll still have smartly run, intelligently thought about institutions of the kind we have today will adapt and grow and change and be big pillars of what we do going forward. They will be but they won't have, the regulators won't allow, or the competition authorities won't allow them to have massive scale. There's going to be, as we've seen in Singapore, we just got 2 retail digital banking licenses issued this week. Very different players from the traditional people that normally run financial institutions. And I think we're going to see the very smartest of the existing institutions will do well. Those that move forward, that grab, tear the Band-Aid off, and realize that in 5 years it will be very different. In 10, it will be, the idea in 10 years' time that anybody is going to do anything with a piece of paper or probably physical interaction is quite unlikely, And there's a whole generation of people coming through that I'm just not going to. I had a discussion with my son the other day, and he said to me, I'm going to the office a week on Thursday. I booked a slot because I need to print something, And it just made me think, he's going to the office a week on Thursday to print something. It's like a big event, because he obviously lives in New York. He doesn't have a printer. It just made me think, it's a very simple thing. Now, cast that forward 10 years. He's in his 20s. Cast that forward 10 years. So, I think there'll be new players, a lot of new players. Some of the existing people that are in the existing players will be very much part of all of that. And then you've got this new fusion of big tech involvement. So absolutely the Facebook, Amazon, Google, all these chaps are going to be in the broad-based financial business. But I think there's there's certain barriers to them owning it all. I don't think they can have it all. Yeah, and I think that's what creates opportunity for existing players to fix themselves and change, new players to, like we've done with Singlife, to come on the scene and get involved in more traditional businesses and, you know, gradually change them over time, so that they stay relevant. So yeah, that's my rather long answer to your short question.
Yeah. Thank you. And another one is, what are some things that you want to do differently in the new upcoming year?
I want to do differently.
Yeah.
Like I think this year has been different for everybody because the way that you typically run your life has gotten a bit messed up. It's messed up from the point of view, somebody like me, I used to travel 2 weeks a month, even in recent years. And so adjusting to the non-physical, you know, I particularly enjoy building relationships. I'd love to have 10 people come to dinner and we can sit and really have a talk. I'm not allowed to. Yeah, and so some of that, yeah, but we've also got to recognize that not allowed to comes because we got on top of this virus here in Singapore. We haven't in other places, and I think I mean, in the end of the day, the digital native mobile first businesses of the type I am involved and invested my time and effort in are all going to benefit from this. So for next year, I don't know. I'd like to be. This year was never one where you really thought it would be the way it was, because in March I never expected to be in lockdown in June. Yeah, in June I didn't expect I wouldn't be able to go to Europe in July. It just had this kind of creep to it. Yeah, now it's looking like, well, this creep is going to continue. It's just going to have flare up, and so. So I'm looking forward to having maybe just stepping back a little bit over the holidays coming up and organize my time a little bit better so that we recognize and don't get too frustrated with some of these restrictions and changes the way, take the best out of them. But above all, I mean, life is about building relationships with people, old and new, and helping people. You know, as I said, in the way of moving up the conveyor belt. So yeah, no big change, but I think we're on the right path. Certainly with Aviva Singlife, with STACS and One Sign Hash and the other pieces that I'm involved in.
Yeah. So thank you so much, Ray, for your time and for answering to.
Pleasure. And sorry I can't see those of you watching, but great to see you virtually one of these days, or face to face, wherever you're tuning in from. So again, thanks for supporting the STACS team. A lot of effort, Fathia, the whole team at STACS, and putting all this content together. And again, thanks to the team. Thanks for everybody's taking time to listen. Thank you.
Thank you so much, everyone, for watching our Fireside chat. Don't forget to stay tuned because our next session will start at 2 p.m. You have all this information on our LinkedIn page. So the next topic will be the road to commercializing for DLC in capital market with some key speaker in the industry. Check out our website where you will have a full agenda with our week with all the panel discussion. Thank you, Ray, again for accepting our invitation.
Thank you. Bye.
Bye.